Hello, I'm Paul here. Today I'm going to be going over, if you've seen the last two videos where I've kind of go over a strategy for, just looking at overall direction. I did it for crypto and I did it for Forex and gold in the last couple videos. Today I'm going to be going over the stock market. Now the stock market, we're going to use the same strategy and we're going to use it for two different methods. That's if you want to look at the stock market and kind of just trade it when it's open, or you could do the other one, which is options. Now it's a little bit differently because you actually have, if you're doing an options contract, you have time expiring and you have to buy contracts. So this formula, this strategy will still work, but you don't have as much time if you're doing it with options. Or you could just day trade if you want, but we're going to be looking at, the market isn't open right now, but we're going to be just looking at where it's closed at and kind of where we would get in if we were to get in. If we're going to find the overall trend by looking at the 6 hour, and then we're going to be looking at we're going to look in at a 3 minute and maybe some other time frames to see if there's any good points to get in. But anyway, let's go look at the stock market. Okay, first I want to look at SPX or SPY. Now, particularly if you want to do this on Robinhood, you'll be looking at SPY. If you want to do this on a brokerage, you'll be doing SPX. You'll make more probably doing it with SPX because you're dealing with, if you're trading like Forex, you'll make more. But let's look at SPX real quick, and then SPY. But they're the same thing. But let's just go to the 6 hour here real quick. And what we could tell right here, if we just look at it, we need to see that there is a direction. And what I've said in my last videos is at least 2 or 3 solid candles in a direction, which we do see that there's a downtrend and a downtrend right here. So clearly SPY or SPX has been going down. So it's not open right now, but we can go in closer to see if there's any good entry points. So we look at the 3 minute here. Now, if the market didn't close at this point, what you would do is you would look for these blue candles, and you would look for these blue candles to start weakening, and then that's when you would get in. So right here at this moment, it's not there, it's going up. So the overall trend is going down with SPY. So you would have to wait for the candle to get weaker at this point, and it hasn't happened yet at the end of the market. So maybe when it opens again. But anyway, if you were doing an options contract, just want to do this real quick. Say you're looking at it right now and you want to come in at a put because, when you see that moment when it starts to get weaker, that's kind of when you would come in if you want to do an options contract. So real quickly, since the overall trend has been going down in the last 12 hours, we can look at contracts for a put because that's probably where it's going to be headed when it opens. So let's go look at contracts real quick for puts. Okay, so we're going to say now we'll be watching when the market opens, we'd be watching for a weaker candle, and then when it starts getting weaker, that's when you would come in. You won't come in at this point. But let's just say you want to do a put, and I always do in the money. So what I do is I try to get as close to that dot as possible. So right now I can get it for very cheap. Like right there would be a good one. But you just write it out right there, and you can make your money doing it that way. But you gotta watch the candles. And SPY is probably the cheapest, one of the cheapest ways that you could do contracts with. Other than that, a lot of the other ones are pretty expensive. But real quickly, let's look at SPY. SPY's the same thing. I'm just going to show you that they're both the same thing. Kind of most likely the same thing here. So we go here to the 6 hour. You'll see it's the same thing. 2 red candles. And then you go here to the 3 minute. You'll see exactly the same thing. So if you want to trade on Robinhood, you have to go with SPY. If you want to trade on Forex, you can do it with the SPX. So let's look at some other stocks here. Let's look at some other stocks. Let's look at MicroStrategy, which is one of my favorites. It's connected to Bitcoin, so this moves. Now, the disadvantage here, if you want to do MicroStrategy as an option here, the contracts are very, very, very expensive. So I recommend in the beginning to just trade this like normal. So when you're trading this like normal, you can only come in when it's going up. So you have to find the moments. You have to find the moments that it's going up, and you scale your way up. You can compound until you can be able to afford a option contract. We'll look at the contracts, but they're expensive. So let's real quickly look at this on a 6 hour, and remember this is connected to Bitcoin. So we have a solid direction right now, you can tell. It's been going down for quite some time, and these are all 6 hour candles. So unless it changes, now if it changes, let's just say I would wait for 2 big candles. I'd wait for a 12 hour candle to change my direction on the market. So MicroStrategy would have to have 2 6 hour candles for me to change my direction. Right now, the trend is down. So let's go look at the 3 minute here. So this is pretty much the same thing as what we looked at with SPY. We would wait for this to come up. We would wait for the candle to get weak, which it's probably going to. It's probably going to go down because overall it's going down. So you want to wait. You want to wait for it to go up, but then get weak. So let's just see how expensive MicroStrategy contracts would be. So we want to do a put, and what we want is to get close to the dot. It's going to be expensive. Right about here, right on the dot. So $4,800. That's how much it would cost for the contract. So what you would do is you would wait. You'd wait for this to get weak, and then you would come in with your put. But the contracts are very, very expensive. But the reason they're expensive is because if you're right, you'll make a lot of money. Now, what I've seen is about on average maybe $20 difference in price. So let's just look for 57 here or something around there. You would get $1,000 to $2,000 for the trade. So that's kind of why they're so expensive. But if you don't want to do options, and because the contracts are so expensive, what I would do is I would look for all the moments where it's going up. It's not going up right now. It's not going up right now. So for this particular stock, I would wait for there to be, but if I wanted to just trade it, I would wait for there to be 2 solid candles up on the 6 hour. So 2 solid candles going up before I make my move. And that's when I would come in. And then I would look at my candles on a shorter time frame. And I'd make my judgment there. But that's not what's happening right now. So let's look at maybe a couple more here. Let's see what we can look at. Okay, let's look at Tesla real quick. And what we want to do here, we want to look on the 6 hour. And this is kind of what you see right here is you see a direction not in the last 6 hours, but you see a direction of it going down. I would personally wait for there to be a clear direction. So you would have, me personally, I would wait 12 hours to see what candle prints. If the candle prints up, then you're going to focus on up. If the candle continues to go down, focus on it going down. But you have to see you have to basically see a 12-hour candle, 2 6-hour candles, of it going in the same direction. But from what I can see right here, it looks like the trend is down right now. So what we would do here, and the only way to make profit right now, if it continues to go down, is to do option contracts. But let's just look at this real quickly. The trend is going down, so what we want to do is we want to go to a shorter time frame, 3 minute. And what you want to do is you want to wait. You want to wait for the candles to get weaker on the uptrend. You want to see that it's getting weaker. So let's say we're checking to see if we're going to do a put here to see how much it would cost, because it looks like it might start going down if you want to base it off of that. But let's look, see how much it cost. Not bad. I thought it'd be more expensive, but yeah, right here you got about $535 here, and you just have to wait for the signal to hit the chart for the uptrend candle on the 3 minute to get weaker, and then you can collect your profit. So anyway, that's kind of what you would do with Tesla. You can't profit right now of it going up because it doesn't look like it's going up. It looks like a downtrend to me. But if you did want to trade Tesla like normal, you would have to wait for an uptrend. Personally, you'd have to wait for a 12-hour candle on the longer time frame here. You'd have to wait for there to be 2 6-hour candles going up, and then you would make your entries based off. You could trade it when you see the signal change, but that's not happening right now. But anyway, that's kind of the formula that you do with the stocks. You basically look at the chart, you look at the overall direction on the 6-hour. I base it off of 2 or 3 candles on the 6-hour, and whatever that trend is doing, I focus that. I'll go to the shorter time frame, I'll look at the 3 minute, and then once I see that candle, once you go here to the 3 minute, or you can do 3 minute or 15 minute, but once you see that starting to weaken, that's when you come in with your trade. But anyway, that's how to do this strategy with no indicators in the stock market.